Welcome, ladies and gentlemen. Precious Metal Fair Edelmetallmesse in Munich, and with me here is now real famous, the most famous copper guy in the world, I would nearly have said here, Gianni Kovacevic, the founder of CopperBank, and it's his birthday today and the 5th birthday of the company. Gianni, congratulations.
Wow, most famous guy. There's not a lot of guys in the business. I guess that makes me the one of the 4 guys that are in it.
This is why it was so easy to get the most famous one.
Yeah, so nice to see you again here in Munich.
And you, congratulations to the birthday.
Yeah.
How show was good so far?
Show's fantastic.
Super.
We run a really simple show. I work very hard traveling the world, communicating the biggest trend in the world for the rest of our life, electrification. However, today, very few people care because this is such a big pivot. It's a generational thinking, and as Don Cox once said about the industry, energy is going through literally a hinge of history. You're changing the way the world works fundamentally. This takes decades. And the biggest winner is going to be electrification, the consumer, and guess what enables it all? Copper.
Of course. Now, we were talking several years already about that copper theme, and we saw prices, I think in the last 5 years, approximately like 330, 350 easily was some of the tops. Then we went down to below 2. Now we are again at 268, 269 today. So what is your take on that? I mean, we are talking so long about it, but it seems like that nothing happens in the copper. It seems
That's true, unless you really analyze it. So picture in the theater of your mind the thinking last year in June, before the Trump tariff kicked in for China, the first one. Copper was $3.30 a pound. It tested it 3 times, $3.32, $3.33. The tariff comes in, the price collapses, goes down to about $2.55, logically. I'm not going to call it manipulation or anything else, but just the business cycle put the brakes on. Speculators said, easy trade, short China, short the economy, copper's one of those inputs. We've went now 17, 18, 19 months, there's talk of some sort of phase 1 deal. I believe that China called their bluff. They know, the cartoon is this, it's 2 drunks walking down the street, shoulder to shoulder, leaning on each other. The fact is, it's 40% of global trade, they need each other.
Yeah, of course.
And it wasn't so easy. They waited. Now we have an election cycle coming in the United States, so I think they both need some kind of good news. Let's look at the details. What the hell does phase 1 of a trade deal mean? When you look at it, not much. Who pays this tariff? The American consumer, American businesses. The steel tariff, who paid for it? American consumers, American businesses. Murray Barra, GM, last year reported a $1 billion extra loss. Why? Had to pay more for steel. Doesn't work. Ever since Adam Smith wrote his book 240 years ago, tariffs do not work. They know that. He gets his advice from Navarro, Lighthizer, and München, and from another 500 CEOs collectively. Every one of them says, you're hurting us, you're hurting us, you're hurting us. Voters in Iowa, voters in the farming states, they don't sell agricultural products to China. Resolution coming. Watch out, 2020 going to be a wild year.
Absolutely, that's the same take I have on that, honestly. But what do you think? Okay, let's assume the tariff thing is gone. The trade war is over.
Well, sedated. It's always going to be there a little bit, but yeah.
That's right, yeah, but not in that extension what we saw. When do you think will kick in higher copper demand? When do you think prices are ready to go again well above the $3 line? I mean, we do not have any new mines, large mines, I mean, smaller, yes, but this is not helping the market really. And, I'm talking like mines like Oyu Tolgoi, 400,000 tons a year. This is what we need for the future, definitely. Yeah, maybe per year.
Hard to come by.
So, what's your take on that supply, demand, market thing? Yeah.
Investors in this sector, because the people that watch your program, we're a very select group. We're contrarians, we're speculators, we understand junior mining, if you will. The first thing you have to accept is that in the whole world, the real world, nobody wants high commodity prices, logically. So when you look at commodities, and if you're honest with yourself, even look at the copper price, go back to the year 2000, there are very few times of ebullience, euphoria, if you will. Because every time you get this rapid reaction to the going higher, who's causing this? It's called a speculator. When they become greedy and they're no longer negative and they take all the slack out of the market, the real buyer of all this stuff, they're tripping over themselves to a point. We are at the tipping point right now. I just spoke to a group of cable and wire manufacturers, and they are hand to mouth. They usually are. They don't have some strategy. How shall we pay for copper 1 year down the road or 1.5 years? They don't do this. It's hard to even make that happen. So we have had, now this will be the 3rd year of a copper shortage. It'll be a small one, but it's shortage nonetheless. It's coming out of warehouses. We've seen stocks come down, and it's also not reliable for people to look at LME anymore. The spoofing in the market, how 40 and 50,000 tons just shows up, but never mind all these things that happen, you eventually run out of the metal because the CAGR growth rate, the demand for copper is going to be 2, 3, 4% as we get to the heart of this pivot to electrification. Starting now, they haven't procured the metal. Look at Tesla. They built their factory so fast in Shanghai from January to today. Mercedes is pivoting, BMW, Volkswagen, but how much copper cable have they procured? None, folks, 0. That comes next year, 2021, and for the rest of your life, where this huge millions and millions of kilometers of copper cable will be procured, used, and put into everything in our lives. Next 10 years is going to be very interesting for us.
So that means like the old highs, I think if I'm correct, was like $5.40, $5.50 per pound?
$4.54 to be exact.
Like that, yeah.
2011 period.
Yeah, exactly.
Markets always want to see new highs, which is why we love the optionality. So I'll make it clear. Frank Holmes and I own CopperBank for the most part. We're the 2 biggest shareholders. And he says, Gianni, you got to tell people the value per share. Compare CopperBank. You can download our presentation at copperbankcorp.com. We got amazing comparables, all the copper companies you know. How many pounds do we have per share? Net present value. And if you look at our net present value per share, when the copper price goes above $3, it is a radical increase. You have to look at the presentation, but it's $1 a share for every 25 cents, that the copper price goes higher. We like optionality. I know it's boring, but it's a school bus in this otherwise risky business, but all of our people on the school bus are little race car drivers, and those are our projects. When we let them go, we believe when the market comes to these normalized prices, there is an outsized gain for a story like a CopperBank. That's why we buy it.
Perfect. That was a great final word. So the copper world is I would say in good shape. And
business as usual. Makes sense that it's negative during these negative times.
Exactly, yeah. But we are now on the edge of the start.
Ooh, it's on an onion skin, I believe.
Perfect. Super. Gianni, thank you very much. Happy birthday again. Big party for you tonight, hopefully, and lots of presents.
Oh, it will be.
Good. Super. Like it. Thank you very much. Yeah, ladies and gentlemen, that was Gianni Kovacevic, the CEO and founder of CopperBank. And you heard it. Copper is right on the edge to really start and restart to gain here higher prices and big market values. And of course, CopperBank also, it's a perfect, I would say, call option on copper, but you do not have the counterpart risk of a bank. And so I would say check it out. Thanks for watching us, and bye-bye from Munich.